I think that's probably a good place to be looking at this. So we went all the way down. We went all the way down from the high. And from the high, we went down to, we were at one stage, at the worst case, we were 14% down. And I guess that the Fed would have been happy if we were at 14% down. Not looking great out there. As you can see, it's a little bit of a bloodbath out here. And the thing is that Bitcoin is now getting to some real critical levels. So, you know, it had the breakdown of this trend over here. You've now tested this support. And this is like the final layer of support before we actually start printing some lower lows. So Bitcoin is really starting to test some real support. Today we're going to look at the reasons why Bitcoin is testing support and also show you guys why it may be a turbulent week, maybe even a turbulent couple of weeks for Bitcoin before we get some kind of recovery. And we're going to talk about how best to play it, because it's not as straightforward as you think. So let's do this. It's not the best day in the world, but we can still have fun. We're still here. Let's do it.
Get the fuck out of bed, bitch, go. Get up, everything I go on. Gotta wake up, bitch, get up. Get up, get up.
Listen, not every day is a good day. Not every day is a good day, but when the good days come, it just feels so good that it's worth waiting until we get the next good day. Or at least that's how I feel today. Not every day is a good day, but today may be one of those days where we actually going to do some buying. Maybe. That you guys are going to help me decide later today. Welcome back, everyone. I'm CryptoManRan here all the time. Bring you crypto love and crypto wisdom. And you should really be asking questions. If your favorite hosts, personalities, influencers are not around when the markets go down, ask yourself some very serious questions about where they are, because we've been here right through the bull and right through the bear, and we're guiding you through this every single step of the way, even when the markets look like this. Not looking good out there, and it's been looking bad, I don't know, for like quite a while. And now we're getting to some very scary levels in the chart. So remember, we broke through this little trend line over here and we started this new trend. We then did like the perfect retest, and then we started to climb. And what you're seeing here is you had a higher low, and then you had another higher low over here. But now if Bitcoin breaks down below this level over here, then we're putting in a lower low, theoretically. And then there's another level, which is at about 37,600 or so. Carl, is that the level, 37.6? And if we go below that, then we've really printed another lower low. Carl, what happens if we actually go below that level? What happens next? I mean, are we then going under 35, 34?
Yeah, I'll put on chart of the day today, Bitcoin, so yeah, 34.
34. Wow, so it's really, I mean, it's important that we actually hold this level here. And just to be a little bit more accurate, I guess that we are looking at about 40,500 now, right? Is that the level before we've broken the first lower low?
Yeah, we can to 39 maybe and bounce there. I think they'll be buying interest at 39. Okay, so that's pretty much where it is at the moment. I guess the question is why? Why is this all happening? And I think we've uncovered the why. I think we know exactly why this is happening. I think we need to look at why this is happening and then decide whether this is a buy the dip opportunity or whether we should hold out just a little bit longer. Because a lot of you guys asked me if I bought my Stargate, which I said I was going to buy if it goes under $2. Well, earlier on today, I tweeted, I haven't bought it yet, and I'm not going to buy it because the market's showing weakness. And I know that FTX paid 25 cents per Stargate token in the auction. So let's just look at the price now. I think the price was like 180 the last time I looked. And the question is, what level so 188. So first of all, great that we didn't FOMO in. Is it time to get in? I don't think it's time to get in yet. I'll let you guys know when it is time. Certainly when I'm starting to get in.
All right, let's look at why the market is doing this. Why is the market doing this? I mean, I think the answer is obvious. I think the answer is pretty obvious. And that is because of what's happening. I mean, when you look at what's happening, you know that it's pretty obvious why the market's going down. It's exactly what we've been saying for a long time. This is nothing new. There's nothing new about this. The reason why the market is going down is simply because of the moon. Because the moon is about to enter Leo, and a sign which has been very good for Bitcoin. But on Tuesday, hours after the release of US CPI data, the moon enters Virgo. So by far the worst moon sign for Bitcoin based on current price history. So if you look at the charts, I cannot believe I'm actually reading this shit. So if you look at the charts, what you can see is that this is actually a load of garbage, but maybe it's not a load of garbage. Maybe, Carl, is this, I mean, am I reading this correctly? Is the Virgo, which actually comes out just hours after the release of the US CPI inflation data tomorrow, the moon enters Virgo, which is by far the worst moon sign for Bitcoin based on recent price history, right?
You can't trust a Virgo.
You can't trust it. I'm a Virgo.
Exactly.
I'm a Virgo. I mean, what is this crap?
Let's get Maran.
I did ask Marion to come on. But so the reason why Bitcoin is crashing is because the moon is about to enter Leo, but it's actually entering Virgo first. And Virgo is by far the worst moon sign for Bitcoin based on recent history. And you can see that based on this amazing, okay, let's stop talking garbage. Let's actually get into it. So there are a couple of other reasons why the price is coming down, not to do with the stars. And I don't think astrology is bullshit, but I think that one was a little bit of a stretch. It was the moons and I think it was a bit of a stretch. I think that is a bit of a stretch. I don't know. Let me know what you think. Okay, so there's tax selling in the USA. According to this guy, and now remember, this guy has zero credibility when he tweets because he is actually the founder of a tax software called CoinTracker. You see, so if you click here, he says, helping drive crypto adoption, CoinTracker, work with us. So here he actually has no real credibility, but he does point towards something. And that something is that we have 11 days to go for the tax weekend. I think it's 11 days less now. It's about 10 days left. What's the day today?
Today, yeah.
It's 11. So there's a week left. There's a week left for tax season. There's a week left for tax season on the 18th. And he said only 4% of Americans actually filed their taxes. Now, there is something here because it was an amazing year for stock markets. 2021 was an amazing year for stock markets. It was also an amazing year for NFTs, and it was an amazing year for crypto. So you've got all of those all needing to sell off to pay taxes, and Americans have about 1 week to go to pay their taxes. And I think that even though the big institutions all have this under control because they've got experience, I think retail investors made a lot of money in 2021. So unlike previous years where all the money was made by funds, I think because of COVID and because of day trading and because of people sitting at home and because of crypto and because of NFTs, this time it's the retail investor. And I'm not the only one that thinks that. I mean, you can see that there are other articles that are talking about crypto and NFT investors face music on tax day. Now, tax day is coming up on the 18th. What happened last year in tax day? Now, you'll remember that last year, the US government was ever so kind to everybody. And they said, you know what, because of COVID, because we locked you up in your houses, because we took away all your money, we're also going to extend your tax deadline where you have to pay us by 1 month because we want to be kind to you. So they were very kind. And so they extended it and they made the tax deadline on the 18th of May. And if you look at what happened on the 18th of May, that's what happened on the 18th of May. See, that's what happened. And the markets continued to go down. So tax selling could be a thing. It could be a thing. Possibly. But I don't think that explains the majority of the sell-off. I think the majority of the sell-off is pretty much very, very, very blatantly because of the inflation print that we're getting tomorrow. We're getting what is going to be the scariest inflation print in the whole world tomorrow. Last time we thought inflation was scary, it was at 7.9%. Now the market is talking about 8.4%. That's what people are now forecasting. 8.4% is what people are worried about. And I don't think that this is going to be the end of inflation. In fact, I think next month's inflation print is going to be higher. Not only do I think it's going to be higher, but I also think that the growth month on month. So the growth month on month this month is actually only 0.5%. But I think it's actually going to get even worse. And the reason is, I keep saying to you guys, is inflation, when they read inflation, they read what they call the consumer price index, which is the price of consumer goods that make up the basket. Now, obviously, it's a garbage basket, which they've created to suit their narrative, to suit their needs. But let's not lose sight of what it is. The consumer price index is the price that consumers pay for products. Now, remember that we've had this war in Russia and Ukraine, and the war in Russia and Ukraine has pushed the price of commodities up. You see that they're on a general upward trend. Now, if you look over here and you look at the data, you say, okay, on the 2nd of March, commodities spiked, and they went up until the 8th of March. There's 1 week in March, 2 weeks in March, where the commodities prices completely shot up, and then they continued to run up for the rest of March. You see, it's quite an anomaly. Now, what happens here is that this has to still flow into consumer goods before consumers actually land up paying more. And so what I think is going to happen is we're going to get a higher inflation print next month, and we're going to get a higher inflation print the month after that. So when we look at this chart over here, which is the inflation chart, I think this inflation chart is going to start looking like an altcoin on launch day. Basically, I think it's going to fly. It's going to fly through the moon. That's basically what's going to happen. And you know, Vadam, I think the guy's name is Vadam, says 8% laugh out loud. It is 8% laugh out loud, exactly that, because the real number is way, 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 way higher than 8%. And there is another thing that no one is talking about, and I don't know why no one is talking about this, and that is that you've got inflation because the Fed printed trillions of dollars, $5, $6, $7, $8, $9 trillion, whatever the number they printed is, too many trillions of dollars. Then you've got Russia and Ukraine, and now that's going to become the new scapegoat. So you watch tomorrow when CNBC talks about inflation, and when the Fed talk about inflation, because they will talk about inflation, they'll say, oh, the reason why the numbers are up is because of the Russia-Ukraine war. Garbage, not because of the Russia-Ukraine war, it's because they printed so much money. They've now got a scapegoat, which is the Russia-Ukraine war. They can say, look, because of the Russia-Ukraine war. The Russia-Ukraine war inflation has not yet flowed into the markets. I can promise you that. Because that only really started happening, as I said to you, only really started happening in the beginning of March, 28th of Feb. That's not in the market yet. And then there's another thing that no one is talking about. There's another thing that no one is talking about. And I don't know why no one is talking about it. And that is because of what's happening in Shanghai. So in Shanghai right now, there are lockdowns to prevent COVID. And there are serious lockdowns. The Chinese government has basically locked everybody in their apartments, not letting anyone get food, not letting anyone get any necessities that they need. I don't know. I mean, I saw this and we've tried to verify its authenticity, and so far it verifies. But just watch what's going on.
这个是这个人叫，完了终于来外头，所有人都在叫。
It's people screaming out the windows in protest in China, but look at the streets. There's no one in the streets.
就刚刚5分钟前头，他们叫我没几个了，
Very
现在
strange
突
way
然
to
之间，
protest.
所有人都叫了，要死！
So this is real. This is happening in Shanghai. I mean, so far we verified this as much as we can.
这个要插进去了，麻烦了。
No one is talking about this. No one is talking about the implications of what this may cause. And it's brutal. It's brutal, 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 because I don't know if you saw this, but I don't know how real this is. But this is definitely worth watching. People flooding the streets to grab whatever food and medicine they can get. There's serious lockdowns in China, and I don't know if this is real, because you never know if it comes out of China, if it's real or not. But apparently drones, listen to this. So...
It's not a problem.
Oh, shut up. Sorry. Let's see if we can play this for you guys. Okay, for those of you who don't know what that means, I also don't know what it means, but it says, as seen on Weibo, Chinese Shanghai residents go to their balconies to sing and protest lack of supplies. A drone appears. Please comply with COVID restrictions. Control your soul's desire for freedom. Do not open the windows and sing. Now, we've heard that this is true. We've tried to verify it, and everything that we're talking about is true. Now, what are the implications of this? Well, the implications of this is that China is one of the biggest exporters in the world. It's one of the biggest manufacturers in the world. A lot of stuff that the US uses and the whole world uses comes out of China. And if this is what's happening in China, they're not working. They're not going to the factories. And if they're not working to the factories, then there's going to be less and less goods. And if there's less and less goods, then the price of goods is going to go up and up and up. And you can already see this, because if you look at the number of ships outside the port of Shanghai. Now, this is the world's busiest port, okay? And even though it's remained open, okay, so the port has remained open, the congestion is at an all-time high because there's no one to load the ships, because the goods aren't arriving. And so you're seeing that the number of ships are going to go there. This doesn't end very well. This just brings more and more and more inflation. This is just brings more and more and more inflation. And now there's this game of chicken between the Fed and investors. And the more that the investors don't move out the way, the more that the markets don't go down, because it's like a face-off, Chamat said. He said it's like a face-off between investors and the market and the Fed. Investors don't have anywhere to put their money, so that they keep putting their money in the markets and keep driving the markets up. The more investors drive the markets up, the more the Fed feels confident and brings out more data that supports a tightening policy. And very soon, what we're going to get is the opposite of what the Fed did last year. Now they've got to start taking the money out of the economy. The same money that they put in, they've actually got to take it out of the economy. And the more the markets continue to rise and the more stubborn the markets are, the more the Fed feels compelled or feels confident to tighten tighter and tighter. You know, a month ago or 2 months ago, 3 months ago, there was no way that we were speaking about a 0.5% rate hike. Now, 0.5% is almost a certainty. In fact, we're talking about 82.1%. 82.1% are talking about a 0.5 interest rate hike in May. And now we've kind of factored in that, listen, by June, 56.4% of people are saying there's another 0.5 interest rate hike. I mean, listen to what Shamat says. I think it's genius.
We probably should take the macro and then boil it down to the startup. So at the macro level, I think that we're playing a very dangerous game of chicken with the Fed. And you can kind of summarize it in the following way, which is that, 3 or 4 months ago, we only thought that there was going to be a handful of interest rate increases. And increasingly what has happened, the market has remained so resilient that the Fed has sort of put out more and more data as the data has justified them being a lot more aggressive. And it kind of crescendoed this past week where they basically said, listen, we're going to move by 50 basis point increments for the foreseeable 2 or 3 rate hikes, and we're going to start quantitative tightening. What does that mean? That means that instead of basically printing money and coming in and buying securities from the market, right? So what happens? When they enter the market with money that they literally do print and buy your bonds, they're giving you cash in return. And typically what that has led to is the inflation of all assets, right? Equity assets have gone up, bond assets have gone up because there's just nothing else to buy. When quantitative tightening happens, they reverse that. And what they're going to do is about $95 billion a month of the opposite action, which means they're taking money out of the system, right? Or in this case, what they're going to do is they're going to let a bunch of maturities roll off and not renew them. Okay, so why is this important? Well, it's important because, we're still 4% from the highs. So we have 7% inflation. We have all this crazy stuff happening. We have a war, going on. We have massive price issues. We have supply demand issues, and the market keeps shaking it off. So I think what the Fed's going to do is get even more aggressive. So you're going to probably see, a lot of 50s, maybe even a 75 point hike. You probably are going to see them, even ratchet up quantitative tightening until there is a bit of a bloodletting in the equity market. They need to see that the market's cracked.
And so they need to see that the market is cracking. And the problem is that the markets just aren't cracking. So every time that we get some kind of slight correction, let's actually look at this on the S&P 500, because I think that's probably a good place to be looking at this. So we went all the way down. We went all the way down from the high. And from the high, we went down to, we were at one stage, at the worst case, we were 14% down. And I guess that the Fed would have been happy if we were at 14% down. But now we are only 7.8% from the all-time highs, which were extremely, extremely inflated. And so it's a game of chicken between the markets and the Fed. And the markets don't have anything to do with their money. That's the problem. Because they can't put their money into treasuries, which is where they would put their money traditionally when things like this used to happen. But right now, if you look at what's happening to treasuries, this is the US 10-year treasury yield. It's gone from, this chart looks brilliant. So it's like, you have the perfect breakout, then you have the perfect retest, and then it goes into like price discovery, like an altcoin basically. But only this is the US 10-year treasury yield rate, which is the interest rates that you earn by holding US government bonds. And now you're almost earning 3% by holding government bonds. That's where it is. And that does this to bond prices. So people can't put their money into bonds. They can't put their money into equities. They don't know where to put their money. That's the problem. The Fed is leaving people with nowhere to put their money because people are looking for returns, and where are they going to get them? Maybe they're going to get some in crypto. Maybe they are going to get some in crypto. This is a great representation that shows if the Fed does reduce its balance sheet by $95 billion a month, and I don't believe that's going to happen because I think they're going to start and there's going to be many things that are going to stand in the way, like this potential recession. It would take them until early 2027 to reach where they were when the pandemic began. So I think that the problem is that the Fed's now in a pickle. The Fed's now got too much money into the economy, and there's actually no way that they can get the money out because they can't get the money out because of China, because of Russia. If they do, they will cause a recession. And so I think the Fed just needs to readjust to the reality that this money is in the system and basically just reprice the dollar, which is, it's a bad case if you're holding dollars. I think it's amazing if you're holding Bitcoin, but it's a very, very, very bad case if you're holding dollars. It's a repricing. It's a repricing. I think the bottom line is you don't want to be in dollars yet, because if you do, and there is a repricing, and there is a repricing, we can deny it as much as we want, then I think it's going to be, I wouldn't like to be in hard currency. I wouldn't like to be in hard currency. That's why you should probably be looking at buying Bitcoin. I'm not saying buy altcoins, but I am saying definitely in this case, you want to be buying Bitcoin. What else? There was also Arthur Hayes. He came out, and there will be a program about this today on our Microdose channel. If you haven't subscribed to our Microdose, go to YouTube. Subscribe to Crypto Banter Microdose. That's where we do short content, 5, 6, 7 minute content videos for people who are time starved. And I will be doing a story around Arthur Hayes. I spoke to him this morning on Telegram. He's predicting Bitcoin to go to 30,000 and Ethereum to go to 2,500. And he's saying that it's based on the correlation that Bitcoin and Ethereum have to the NASDAQ and to growth stocks. And he's predicting that the NASDAQ will come down as the Fed starts to tighten. And he thinks that the Fed's going to tighten quite a bit. And if you look at the numbers around this, so you look at the correlations between Bitcoin and the NASDAQ, and the correlation is getting higher and higher. In fact, Bitcoin's correlation with the NASDAQ has reached a new high. It's now 0.6945. So you can call it 0.7. So Bitcoin is now really, really, really being priced by the market as a growth stock, as part of the NASDAQ, which is, I guess, not great when the markets are tightening. See, what that does is, it's, if Bitcoin is being priced like stocks, like a growth stock specifically, it's performed minus 6.1. When you compare it to things like commodities and oil, those have been a better bet. But I think long term, show me this chart long term, any time of the day. Alrighty, what else? Let's see what else there is today. For one, we know that there has been more traffic on exchanges. Interesting. I want to show you which exchanges. So we know that there's been more traffic on exchanges, and we look for that usually because those are the earlier signs of recovery, is when people are comfortable to put money in again and when there's volatility. And we see that in the month of March, we did see about just under 10% or just under 7% increase in traffic to exchanges over here, which is very good. A good sign of recovery, a good sign that people are redeploying their money. If you look at which exchanges, this is quite an interesting picture. So Binance, obviously the biggest, Coinbase, the second biggest, and the third one is Bybit. So it does mean that two things are happening. One is that leverage trading is increasing. We know that, but also Bybit is adding a whole lot more altcoins, and so a lot more people are trading on Bybit. Remember, if you do want to trade on Bybit, there's a referral link below. Click on the referral link below, subscribe, put money into the account. Later on today, we're going to be doubling someone's portfolio, 5 people's portfolios. We do that every day. We double 5 people's portfolio who signed up for Bybit using our referral link. And I think we've now got confirmation that they're actually one of the top 3 exchanges. I mean, if you look at traffic and you look at volume, they really are growing super, super, super fast. What else? Oh, this is brilliant. This is absolutely brilliant. Very important. So there was a survey done by the NASDAQ, and they surveyed financial managers who manage $26 trillion worth of assets. So big financial managers. And they found that 72% of them would be more likely to invest in crypto if there was a spot ETF. Also, the advisors that participated, 86% of them plan to increase their investments to 6% in their portfolios. So this is a sign that a lot more money is probably going to flow into crypto. What we do need is we need the one thing to be approved, which is the Bitcoin spot ETF. And we know that Grayscale are on this big mission to get the Grayscale GBTC fund transformed into an ETF. But when that ETF comes, I think that it's going to be an actual huge event. Because if you're talking about 72% of fund managers who manage $26 trillion worth of assets, ready to increase their portfolio allocation, and I think their portfolio allocation is probably under 2% today, and they're talking about increasing it to 6% of their portfolio, but they need a spot ETF, then that's huge. That's huge, 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 huge. What else? Elon. Strange. This is strange. So Parag Agrawal, who is the CEO of Twitter, he published this morning. This was the first communication. It says, Elon has decided not to join our board. Here's what I can share about what happened. The board and I had many discussions about Elon joining the board and with Elon directly. We were excited to collaborate and clear about the risks. We also believe that having Elon as a fiduciary of the company, where he, like all board members, has to act in the interests of the company and all our shareholders, was the best path forward. We therefore offered him a board seat. We announced on Tuesday that Elon would be appointed to the board contingent to a background check and formal acceptance. But anyway, long story short, Elon is not joining the board of Twitter. What does this actually mean? Why isn't Elon joining the board of Twitter? Well, I think that there are a few ways to look at this. The first thing and the most obvious thing is that by joining the board, Elon would be prohibited from buying over, I think the number was 14.9%. So if Elon joined the board of Twitter, he would have to limit his maximum shareholding in Twitter to 14.9%. And with 14.9%, he may have problems implementing what he wants to do. So maybe by staying off the board, this is his way of saying, look, either you do what I want you to do, or I've got so much money that I'm just going to buy up the whole of Twitter. So you be careful, and I'm going to sit off the board, because if I'm on the board, you know that my maximum influence can only be 14.9%. But if I sit off the board and I just sit there, and what I do is I just troll you on Twitter, right? And I start coming up with a whole lot of solutions that no one in the whole of Twitter could have come up with for years until Elon Musk came on. I mean, the guy's talking about an edit button. He's talking about charging $3 a month, and that would eliminate the bots and stuff like that. And he's been going like this all weekend. He's the first guy that's looking at this with analytical eyes, and he's like, mostly top accounts rarely post and posting very little content. For example, Taylor Swift hasn't posted anything in 3 months. Justin Bieber's only posted twice this year. And it's like there's new life and there's new vigor in Twitter. And I think that what he's doing here is I think he's staying off the board for a reason. Because when he stays off the board, then he can really influence them with this, like almost like this cloud hanging above them. And it says, you know what, I will buy more, and I can buy more because I used 1% of my net worth to buy 9%. I'll easily just chuck here another 2% of my net worth and take this whole company public, and then everyone's fired, and I don't care about the board. And I think that that's what Elon Musk's play is here. I don't think that it's anything else. I think that's Elon Musk's play here. What else? Oh, this Don't know if you saw my tweet today, but I said, feeling cute, may go shopping later. When Do Kwon did that over the weekend, didn't do anything to the price. So there you go. That was his tweet. Now we've got Do Kwon and the Luna Foundation in the top 20 Bitcoin holders in the world. They now hold 40,000 Bitcoin after their last purchase. There's also another $600 million in the account. The account is starting to run a little bit dry. Don't you think? The account is really starting to run a little bit dry. And the market is not really moving anymore when Do Kwon says he's going to buy. So that's pretty interesting. I also think that if you look at the Luna price on the weekend, let's quickly go to the Luna price. And I want to show you something here. I think that the market is actually punishing Luna for the Avalanche buy. Now, tomorrow we've got Emin from Avalanche on the show, but I think the market started punishing Do Kwon somewhere over here for the buy that he made of Avalanche. I don't think the market wants Do Kwon to be buying shitcoins, altcoins, to be backing his portfolio. I think the market really liked this whole Do Kwon buys Bitcoin to support the stablecoin, but the market doesn't want him to be buying Avalanche. And I don't know if you saw, but the whole weekend there were attacks on Luna by some reputable accounts. I mean, Jack Nevalt's account's a very reputable account, and he wrote a thread which, I mean, I actually want to call it up because it was seriously one of the. He's a good account. I mean, I follow him. I think he's a fantastic account, but this thread that he wrote on Luna was one of the worst threads that I've ever read. I mean, accusations that Luna is not actually burnt, but actually when it does get burnt, it goes into Do Kwon's account. I mean, this was one of the worst tweet threads I've ever read in my life. Do Kwon responded to it systematically, but now everything in this thread, Kian, you're right, everything in this thread was absolutely, completely wrong. Like, I haven't seen a thread like that before. Look, Do Kwon did well because what Do Kwon did, I mean, I love your style here. And I tried to get him on tomorrow with Emin, but he said it's very late in Korea. So, yeah, he says he's quite right. He says, the only bank run that happens during the bear market is on my time. The cost of saying made up clickbait is close to none. Likely Do Kwon won't respond to it. Maybe the guy's right. And even if he does respond, well, I'm going to just get more engagement. So that's the problem. That's the problem here. Anyway, long story short, Do Kwon debunked the whole thing. It's business as usual. I don't see anything wrong with Luna. Although, to be honest, I wouldn't want Luna to be buying more altcoins to be backing UST. I'm all for them backing UST with Bitcoin, with the reserve currency of Web3. But I'm not sold on this whole thing with backing it with other altcoins. And I did speak to Do Kwon about it. If you want to know more about that, go to the Microdose channel. There's a whole lot of stuff on the Microdose channel. Crypto Shorts. So we've changed it to Crypto Shorts. Yeah, we've changed it to Crypto Shorts. And now I can tell you guys that the first thing I did when we called it Crypto Shorts was I registered all the Crypto Shorts domains on Unstoppable Domains. And I said to you guys, if you are looking to start a business, if you do have a business, go and register your domains on Unstoppable Domains, because then you've got the .crypto, .eth, .everything else domain. You can see that there's a referral link below to that. And I mean, sign up, you support the station, and you protect your business at the same time, and it's cheap. Tornado Cash. I do talk to you about Tornado Cash. You can see the Ronin hacker he's laundered 7.5% of the stolen funds via Tornado Cash. So love it or hate it. I mean, one, Tornado Cash is being very stable in this time. So let's quickly look at Tornado Cash. I mean, it's held above 40 in the 40s. It's just under 40. Of course, as I said, it goes under 40. But maybe a buying opportunity, because I think what we're learning more and more is that Tornado Cash is going to be used, and it's here to stay. It's not going anywhere. Well, you can't take it anywhere because it's just a decentralized protocol, and no one even has the keys. Is there anything else? Russia defaulting on its debt. They try to pay back their foreign debt in rubles because they don't have any dollars. And that's actually a default. Solana, guys, what happened with Solana NFTs? How come we had this explosion? The whole office was Solana NFTs exploded. Everyone is partying. I don't know if anybody's been watching Solana NFTs. If there are any Solana NFT degens,
OpenSea listing?
No, it wasn't the OpenSea listing. It wasn't the OpenSea listing. All right, last thing today. The amount of Bitcoin that has not moved for 12 months is now on its all-time high of 64%, which means that people that are buying are actually hodlers. So gone are the others, but people that are buying are actually hodlers. Let's see, is there anything else? Oh, this is quite interesting. Ethereum, I mean, I love headlines, and I love when you actually read the headlines. So Ethereum processed 4.5 times more transactions than Visa in 2021. Sounds like an impressive headline. Sounds like Ethereum is very, 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 very fast. But don't fall for that shit, because they just processed bigger amounts. Now, the reason why they process bigger amounts is, remember, every Visa transaction is a small transaction. It's to buy bread. It's to buy, I don't know, beers, alcohol. Some drug dealers also accept Visa and MasterCard. But Ethereum is for bigger transactions. It's for DeFi and stuff like that. So when they say that the transaction, I think it's more 4.5 times more transactions than Visa. I think it's more value of transactions. But I mean, I'll read this. Very interesting. Very interesting. All right, let's double someone's portfolio before we go, or let's double 5 people's portfolio. Remember, if you do have a Bybit account and you did sign up with a Crypto Banter referral link, what we're going to do now is we're going to select 5 accounts, and we're going to take the value in the account. We're going to double the value of the account up to $5,000. Now, on Friday, we got hit for a big one. On Friday, we spent like $6,000 on this shit. $6,000 I spent on Friday. Let's see if we can double more community accounts today. Let's see. Let's do 1, 2. Hopefully, this is a big account. I want to double someone's portfolio. And remember, you can just sign up. You don't need to trade. Just sign up. Put some money in the account. I get this account refreshed every day or two, and then we pick 5 accounts. Okay, so remember the numbers today are 2615. So let's quickly unhide this. Let's see what we're going to give away today. Remember, double up to $5,000. If it's over $5,000, well, not doubling it, because I don't have that much money, because it's a bear market. Oh, I think those were very low. Hold on. 2615. Oh, what do you mean? $17, $11, 000.
Why didn't you 15x the 2 with money in?
Because it becomes an administrative nightmare. That's the problem. Let's see. So you see, we could have landed on this 7,000 guy over here. We could have landed on the 7,000 guy. We didn't. Let's see who else has got money in their account. There's another 3280. We could have hit that one. We didn't. We could have hit this 4810, this 9. Imagine I'd done these 3. I would have 9239, 4810, 1853, 16216. I mean, this is the easiest way to earn money in the world. Wow. Alrighty. Lastly, before we go, Crypto Banter microdose going to be changed to Crypto Banter shorts, as I said to you guys. So go to Crypto Banter microdose there and subscribe to this channel, because this is where we're going to be dropping a whole lot of content. Carl, weren't there charts of the day that you guys dropped here today?
Yeah, they should be coming up.
Okay, so 2 charts today are coming up now, and there's going to be 3 or 4 stories also dropped here. So subscribe to this channel. It is where we're going to be dropping microdoses of crypto content. I will see you guys again tomorrow. Hopefully tomorrow is a better day than today, and it doesn't look like this. I'll be here either way. The only reason why I may not be is if my wife has a baby. She is due. She's due any day today, any day now. And let's see if she gives birth. I won't be here. But otherwise, I'll be here. I'll see you guys again tomorrow. Until then, have fun. Stay safe.